Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today is Wednesday. You know, we had a pretty feisty move off last week's lows that took a lot of people further than they probably thought they could go. If they were long and, you know, and they trailed it, they made more than they thought they could until, you know, today's reversal. Or if they got out well before and didn't trail it the right way, kind of like me, you were frustrated. And then if you started shorting a little too early, you probably got stopped out and didn't, you know, get the trade today. So I guess the moral of the story is, you know, do what you do well and try and be consistent. Because today, finally, after the first 20 minutes or, you know, hour after leftover shorts got squeezed, or people who chased the move thinking, oh my God, we're going to continue going, and didn't realize we were just 6.5% off the lows, got in, the market pretty much started to lose some steam, and around midday you had a lot of red dog reversals trigger everywhere. You also had oil, you know, go lower, which is something that you know, contributed, and also, you know, what went on in Canada. So, you know, you want to blame it on something, but I just think that the market actually needed to retrace, and it's healthier. If we would have went up another day today, it would have created more fuel for the pain trade that nobody wanted on both sides of the market. So let's just run through the charts. You look here at the spiders. Okay, a lot of people want to know what is a red dog reversal. Well, there you go. You got it. Okay. If you look at the double low that we put in here around 182, remember that Wednesday, this was your low. Thursday, your higher low. Your gap up on Friday, held it, reclaimed the 200-day. Then today, the way the red dog reversal works is, okay, just say somebody started shorting on this day or this day and continued and was in a world of pain, okay, saying, wow, I can't believe I shorted this. We might even go see the moving averages. Once we went above 194.20, they might have got stopped out. And just say, you know, you were long these 2 days and got and sold it on that Friday or sold it on Monday and missed out on yesterday and said, I got to be back in this market and keep up. We traded above yesterday's high. People might have chased and got long. So then what happens? It pushes through, squeezes shorts, baits and longs, comes back below. Then anyone who said, oh my God, I can't believe I just got squeezed out at the top, I got to short again here. And anyone who just bought here says, oh wow, I just chased a huge 6.5% move. Let me get out. And then PS, that creates that action area, 194.20, that could have got you short versus the highs. So the way the real strategy works is you could have shorted 194.20 versus the highs here. If you're a swing trader, that's 91, so that's 71 cents is your risk. And you could have made, just as a trade, if you said, I'm going to put it on here the second or third time it did it, because it did it a few times, and just cover on the close, you risked 70 cents to make about $1.10, not great. And if you covered 2/3 and said, I'm going to keep a third because I think we could retrace to test the gap from yesterday, or maybe even fill the gap and test the 200-day, you hold some, and then we figure it out. If you go to the 5-minute chart, just to show you how, you know, it plays with that area, because it played with it a few times. Okay, this was the push through. Okay, where, you know, at first it actually here it pushed through, came back, held, went to the highs. You could have actually drawn a little bit of a trend line here, which some people were talking about in the chat. Then once it broke this one this time around 11:30, things felt a little different. That's when oil got weak, or that, no, actually oil got weak somewhere around that oil number. That was pretty horrendous. But then this time came below 194.20. I know for me, I tried it once or twice, but this time I said, you know what, I'm doing it again. I was a little early, got short there, came below 194.20, which was the prior high, which was right here, added some. This time, no real bounce like the last time. Came in, came back up, made a lower high, and then you had yourself a nice trade. So, and now the question is, if you take risk overnight, you know, you probably should have some short. I actually was flat, and then at the end of the day, at 4 o'clock, it was ticking up a little bit, so I just took home some small spiders short just to do the right thing. I wasn't going to, because if we gapped up tomorrow, it would definitely frustrate me more, considering that I think that this big move is indicative of another one, but I think we could still come in a little bit. You know, if you go to Fibonacci retracements, which is what I use sometimes to measure speed, from Wednesday's low to today's high, the 25% retracement, and that's very shallow. That means we're stronger than strong we should see 191.81. So if that's the case, 191.81 is right around this gap. So you would think we could at least see that. Why would we just be so pent up in here? That would make no sense. That's why I was so frustrated yesterday, that extra day. But anyway, so the 25% retracement is 191.87. And then you could even see the 0.382% retracement, which is still commitment to what we saw from the low to today's high. So that's why you got to give them these things some room. That takes you at 190.12, and that would also take you back to around the 200-day. So on the close, I know Mark was like, we should be buying the close, or a few things. I'm like, why? We just had a huge move. We just went 6.5%. We had our first red dog reversal into some pretty significant resistance. Why just buy here when more compelling would be to test at least this and then maybe that? And if you're a short trader and you did cover into this capitulation, maybe you looked for your signal, you got it today because there was no signal so far, and you might even be all in short saying, you know what, this was my signal and I'm going to cover into here. So everyone does it different. So at this point, it did reclaim half of this, and then if you want to look for other signs, some people are like, well, look at the Russell. The Russell had an outside day today, didn't even get back to the 200-day, which is true. You had your reversal candle here, broke this small little descending channel there. I remember this day when it came back into it, everyone's like, the move's over, but I'm like, look at the 3-day move, and we held right here. So I don't think it's the end of the world that it pushed through and engulfed it and put it in an outside day. It doesn't mean game over for the Russell, but that's one little thing to take notice, but it's an outside day. So the question is, what type of retracement do you have here too? So if you want to be prepared for tomorrow, which is what I like to do, be prepared for the following day, you go to your Fibonacci retracements to see what would give you some commitment to this move off the lows. And this one already went through the 25% retracement. That means it's not as pent up, or there's not as much momentum, but still the 0.382% retracement comes in right here. So really, tomorrow, if we open lower and things don't go down to 108.26, maybe you try and be a buyer of this to keep this trend alive. So this one day could have been just a good trade if you covered your shorts into this, okay, or covered when we came above this prior high and said, oh, I'm looking for a good short sell signal. You got it. And then hopefully you stayed with it all day long, closing the lows, and then you took some home for follow-through because traders love follow-through. So it would be good to see downside follow-through. That would be at least things playing by the rules versus gapping up tomorrow. I don't want to see people get trapped. That would kind of suck for them and just not be healthy action. So we'll write down today's low tomorrow. 0.382%, and then you even know where the 50% retracement is, which means things are a lot slower and they let things come down further. The XLEs also, if you put it in here, that I tried shorting it earlier on. I didn't go back to it. I should have. I was just a little early. Did a nice red dog reversal right there. Pushed through, held the 21-day, which has been pretty much held this rally the entire move down. You had your red dog reversal down here, a little follow through, some commitment, triggered above this. And I don't think this is game over yet, but you do have an outside day on top of a sell signal. So now you want to see what's next. And at this point, it's been in such a negative trend. Okay, why not sell into that? Look at the size of that move. But the size of this move tells me you're still going to get some back and forth. The USO, look what it did here, though. The USO actually came off the lows, came into the 8-day. The 8-day has been on top of it for so long, got rejected. And if we do get another move down in oil tomorrow below this, you're going to probably see some emotions flare in the actual market as well as the XLE. So if you've been trailing along, congratulations, and this was your sell signal. And if you were thinking that we're going lower, here was your short signal into resistance, and this was the target we talked about that we could see, well, way down here. So why not take some off? The FAS, that's something I actually traded. I haven't traded this in a while. One of my friends who's a sales trader said he liked it short. I've been watching it, and this one, had a nice little trigger. Traded through the 122 area, went as high as 195. Goldman Sachs was weak for the majority of the day, giving you some signals the banks could retrace, and this gave you a nice trade. You go to your 5-minute chart to see how it transpired, because it did play with it a little bit also, like everything else, but it wound up giving you that nice trade. Okay, you look at it like this, because this is what it does, guys. A red dog reversal is meant to squeeze out the last portion of people trailing shorts, and that's what it did. Then once everyone is squeezed out, and then someone chases, all of a sudden, boom, you get that clean move. And that your first step was right here. Once it traded below this, you could have shorted versus 150. You could have added at 122, and then this one never got back above it and gave you a nice move. I think I covered somewhere in here, and I'm not shorted overnight, but some people are, and you could be. Why not? Look at the size of this move. You go to your retracement rules here also, just to map out where you want to see if commitment comes in to buy a dip. This still is above the 25% retracement, so you could still see 96.87. It could still see the 0.382% and the 200-day, which would be at 94.40, before you're looking to just buy it back. It doesn't have to be pent up. Who knows? Maybe it opens up and you have a high-level flag, and that would be unhealthy. We've seen that before. But in a normal world, you should get back down to here, and if you're short from here and you made a lot of money, you go out short a third, so you don't give it all back if something happens overnight. And then typically you should get some kind of follow through into this area. Here's your 25% retracement, and here's your 0.382%, and then here's your 50. So whatever, that's how you map it out. Some people are like, why'd you sell your BABA? Just taking the name BABA out of the equation, and I do think it goes higher. It had a big move, and I don't know if the market's going to retrace, so why not have a little risk off? This was your red dog reversal down here. Here's when it triggered above this small trend line. Then it held, gave us a nice trade above this, and then it gave a small red dog reversal sell signal when it traded through 92.50, couldn't hold it. So now we'll see. If it goes sideways a little bit right here, I'll be in it quick, or if it happens to retrace a little bit more and wants to let the moving averages catch up, which it's been riding now, I'll do it a little closer to 90. But this had a nice move, so I don't need to sit through it, so we'll wait. Some people are like, what do you think of Tesla? I think Tesla looks like, looks bad. Sorry, I'm feeling like I'm on the other side of the coin from Sperling a little bit lately, but I'm going to tell it like it is. I'm not going to agree with him because he sits across the desk. This was when it broke down. This was your big gap after the event, and this was a small little feeble rally. Tesla usually has much more power, if it's going to be good. And at this point, you had a red dog reversal. It gave you a quick trade on the news to go from red to green, but this also traded above 235, came below, and to me, this looks more like a short than a long, but that's just me. Twitter also, I tried the past 2 days. This looks like more of a short than a long. Okay, this came into the third, got negated. I was thinking maybe this wedge could go to the upside and play catch up to like a Facebook, so I was long it in here. Looked a little better there, and then on that I was like, that shouldn't have happened yesterday, so I sold the close, tried it today, didn't work, and then pow. So now this is telling me, no need to really be long this thing. Okay, this bar is still uncontrolled, which was different than Facebook, that actually gave you, this red dog reversal right here, gapped above, okay, this descending channel, and took back that entire day. That same day that happened on Twitter, did not get taken back, so this is actually weaker. So if on Facebook, it was more leadership capabilities, and then it went through, and then you got a doji. So this is almost like a small rest signal too. So if you've been long it from here, why not give it a rest and see if it comes in and holds the moving averages for another buy. Tried to push through the highs here and didn't have enough juice. So those are my thoughts there. What did gold do today? Gold, pulled back a little bit. This I would, if I would be out of the way. If it breaks here, I would just sell it. I think this was not a strong retracement, still below the 200-day. Gave you a small trade when it cleared this, 117, but not really saying a lot there. The TLTs, not sure what this is telling me, but I guess you could say after a big move, after clearing this 114 zone, it rode the 8-day the entire way, and then, had that crazy move last Wednesday, came in. It's trying to hold here. You have to have a really big thesis if you want to stay long this thing after this move, but small little reversal here towards the end of the day, still hugging the 8-day. It's just a little bit more wishy-washy, so take a little bit more care there. Boeing, remember I talked about Boeing in the morning call today? My goodness. I wish I did this one. Basically, it was up $3. I'm like, I think you could sell Boeing versus buy it here. Had a big move from the lows, and if it does go red, you probably bring down the overall indices, and that'll help you with your red dog reversals. I did not think that was going to happen. This is friggin' ugly engulfing. Stay away. CMG, did you rally at all? Nope. Okay, so this is in the penalty box and should stay there. Your low pivot now is 607. You know, Netflix gave me a day trade. Gave a lot of people on the site. You know, there's a setup. Sometimes it's a broken stock, but there's a setup. And this had a nice tight setup going into the morning, showed some relative strength, triggered above 369, and went as high as 381 before closing off. That's a nice day trade. You know, I think I was done with it around 373-ish and made some small active money, and we'll see if it continues up into this gap, but I would just continue to take your trades, as this is considered a broken name for now, especially considering the size of this gap, but there was something to do there today. And that's really it. You know, this market definitely is pushing the envelope both ways. There's lots to do each day. Sometimes things don't make sense. If they don't make sense, don't get stubborn. Don't lose money for no reason. Yesterday, I started shorting the spiders at 193. Okay, went out short them, lost money because I was pissed that I wasn't long anymore. But today, I got squeezed out, and the old red dog would have been like, I'm done shorting. You know, and I hate being short, but I said, you know what? I was early. Things ran out of gas, and then I put on the spiders short, the fast short, made my money back, and had a good day today, as well as tried to stay long. You know, at this point, you know, I feel balanced again, which is crazy the way the trader's mind works, where, you know, you feel like something owes you, which you shouldn't really think that way, but caught that end of the trade, and now I feel like we could have some back and forth, and I think some things hopefully will make sense. I'd love to see 1905, 1915 on the S&P. I'd love to see that hold, buy it back, and then, you know, continue. You know, the type of bounce that we saw usually is an indication that we could continue. Like I know IBD put us back in market uptrend, and we were so overbought. So now let us, you know, burn off the overbought, hold higher, hold that 25% retracement or the 0.38% retracement, then get long again. Try and be in best in breed stocks that are holding in well, and see if we could retrace back up. If all of a sudden we fall apart, we don't hold the 0.38% retracement or whatever we did before, then you know we're just back in this range, and volatility will spike, and we'll see what's next. So let's take it as it comes, but just do compelling trades. Do what works for you, and try not to get that frustrated, because yesterday I was pretty much at wit's end, and today was another day, and all of a sudden things change. You know, that doesn't happen often. But anyway, have a good night. Got to get out of here. My dad's in town. Time for some steaks and red wine. Be well.